Okay, the market turning off of record highs, turning down off of major resistance levels for the NASDAQ, S&P. We had the Dow down 243 points, down 0.5%, just over 0.5%. S&P was down 18, almost 19 points, down 0.28%. The NASDAQ was flat. It was down 0.08, down almost 19 points. The Russell was down over 0.5% with the Dow, and the VIX was up 0.74%. Trump had a cabinet meeting today. He was asked about the government shutdown, but he said that the administration plans to use the government shutdown to permanently cut government programs popular with Democrats. He's threatened this. He hasn't gone through with it yet. Does he do it? I don't know. I'm just telling you it's something I'm paying attention to, because if he ends up doing it, we see permanent layoffs. You know, the government workers are furloughed right now. Do we end up seeing permanent layoffs and government programs ended, government agencies eliminated? I don't know. I'm just telling you it's something I'm paying attention to, this government shutdown. And again, Bitcoin is doing exactly what it did the last government shutdown, where it rallied up about 10.5%, and then it began to decline, ended up dropping 20% to the government shutdown and about 21.5% just bottoming after the government shutdown. The S&P 500 was in a downtrend already, ending in a downtrend with the government shutdown, having already 2018 being worried about the Fed and the rate raising campaign, worried about the government shutdown. It had already sold off into the government shutdown. Now it's rallied into the government shutdown, the complete opposite to what it did last time. So keep that in mind. We'll be watching. Does Trump go through with this or not? They just had the seventh vote on the clean continuing resolution, the CR, to fund the government at permanent or current levels, and it failed again. So again, this could go on longer. This could go on several weeks. The last government shutdown was 35 days. It was over a month. Coming up in the middle of the month, you're going to have federal workers starting affected by the government shutdown, starting to miss paychecks. Will that apply more pressure to the situation? I don't know. But again, this is a situation that I'm watching closely, because again, if there is permanent layoffs, if the Trump administration goes through with what they're saying they're going to do, there can be real concern on Wall Street about the already fragile labor market. If you have, a boatload of federal workers being permanently laid off, their jobs on the chopping block, be concerns about the labor market. There could be concerns about consumer spending. There could be concerns about the GDP. We've already had the Treasury Secretary warn that this could impact the GDP. But just pay attention if the Trump administration does end up going through with this, and I don't know if they will, but they're saying they're considering it. Trump asked about it today, and remember, earlier in the week, Trump said we would hear in 4 or 5 days how many permanent jobs are going to be lost. That takes us into the weekend, on into Friday, Saturday, Sunday. Are they waiting for the stock market to close on Friday? I don't know, but just pay attention to this issue. Maybe it's a nothing burger. Maybe there's another catalyst that ends up giving us a sell-off. But I think you got a good shot that this is likely it if the Trump administration ends up going through with this. And even if they don't, the government shutdown the last time ended up rattling Bitcoin to drop. As I said, Bitcoin ended up dropping over 20%. I think we could see something very similar in the stock market. Bitcoin is turning off major resistance. So is the NASDAQ and S&P 500. Food for thought. Please support the channel with the link directly below. If you like the charts, you like the indicators, let me know that. And watch the video all the way through. I've got really important charts to show you that I normally don't have the time to show you. But please support the channel. If you follow the link below to take you to a secured site, you can donate any amount you want. And I just ask that you do that. Partner with me rather than getting sponsors and selling you a bunch of stuff that you don't need. They contact me all the time. I turn those offers down. Most YouTube channels have sponsors. That's how they make their money. I choose not to do that. I would rather just ask that you do what you can to help out. So please consider supporting the channel today. Follow the link below. It will take you to a secured site. You can donate any amount you want or make it a recurring donation. I thank you for your consideration for that. If you could take a moment to help out, I would really appreciate it. Watch the video all the way through. I'm going to show you amazing charts. Now here, just quickly, the VIX You've got the tightening of the bands. You've got the VIX above the 50. You've got the MACD still in positive territory. The S&P is making a new high. The VIX is not making a new low. As long as the VIX is above the 50 period moving average, the green line right there, and the MACD is positive, there's risk of a spike in volatility. The bands being tight for so long are telling you something big is getting ready to happen. It's going to shock a lot of people when it happens. Last time we saw the MACD go positive, we saw the S&P drop 21%. Did we get a reversal? Did we get a big pullback? Watching to see how it unfolds. I've had two different people in the herd make comments to me about the VIX, and another person told me I'm reading it wrong. Herd, there's the low volatility. This is so bullish for the market. This time it's different. Until we get a bar that starts turning and reversing that wipes out a couple of weeks worth of gains in one day, you start getting this ugly reversal bar, wiping out days of gains or possibly weeks of gains very quickly. And then you get all these people that are complacent starting to wake up. They're shocked that it happens. And just be aware of this signal and look at the signals that I'm going to be showing in this video. This is a huge red flag. Like the S&P and NASDAQ turning off major resistance. Bitcoin, if you watch my Bitcoin videos, you know Bitcoin's turning off major resistance. Slammed into it in July and August, now hitting it again. Got topping tails in the weekly time frame back then, getting a topping tail this week. I've warned you, the dollars are bottoming. This is a dollar monthly chart. The dollar monthly chart is hitting the major trend line of support here, parallel to the upper boundary. The dollar is likely bottoming. We could see a peak for the market, or in the not too distant future, in the coming months ahead, we can see a peak for the market. Sometimes you bottom the dollar and the market peaks. Other times the dollar bottoms and the market peaks a little bit later. The dollar rose after the 2021 bottom. There in 2022 it rose. We had a major sell-off in the stock market. You're likely going to see something similar to that. So either we're going to pull back and then go make one more high, or you're going to see a topping process finish out here and now, one or the other. So keep that in mind. This is not good for Bitcoin. This is not good for gold. We still may see a final run of the fourth quarter with Bitcoin, with the stock market, if we just pull back. But the risk is that we're topping. It could be we see the dollar go higher, market have some volatility, and then still get one final run-up during the fourth quarter or early on into the first quarter. The fourth quarter, we might see a November, December top or a January top if we don't peak right here, right now with the stock market, with Bitcoin. The dollar does rise. You want to be paying attention to gold, which is, again, you have gold at record highs. You've got the stock market at record highs. You've got Bitcoin at record highs as the dollar's bottoming out. People telling us, oh, no, the dollar's going to keep going. The dollar's bottoming. It's likely bottomed. So just pay attention to what's going on. I showed you this chart yesterday. Again, warning signs. You got junk bonds making a lower high, now a lower low. We're taking out that previous low. S&P made a higher high. They diverge from one another. Now, oftentimes the divergence between the two can mark a turning point where you have a lower high on junk bonds and you have the higher high in the market. They don't always diverge from one another, but often when they do, it often marks a turning point. Now you have a lower high, lower low, so again, you're likely going to see some type of sell-off. The S&P 500, I showed you this yesterday. Keep warning, we have this Dow theory sell signal. And previously I told you it may not be done yet. It looks like it might be done because we're getting that 9 count in the weekly time frame on the Dow with our sequence count sell signal. I showed that yesterday, but the transports made a lower high, the Dow made a higher high, the Dow made a new all-time high, the transports did that. We peaked back over here in 2021. A little bit off the chart there. We've made a lower high. You have this massive divergence between the two, and then here in the more recent price action, you have a divergence. Back at the bottom, in April, we had a divergence. The Dow got a higher low. The transports made a lower low. They diverge at turning points much of the time. Got one right now, a Dow theory sell signal. It's a warning sign. Either we're going to get a bigger sell-off or we're going to get a top, one or the other. That's what it's warning. NASDAQ 100 equal weight has a divergence with the NASDAQ. NASDAQ made new highs this week. The equal weight did not. The equal weight peaked out on Friday with the high. Last time we had a divergence between the two, we had some volatility in August that ended up leading to this decline of 4.28% on the NASDAQ. The divergence between the two, the equal weight made a lower high, NASDAQ made a higher high, and you had some volatility. Again, now they're diverging again, a smaller divergence between the two, but nevertheless a divergence to be paying attention to. The equal weight on the S&P making a lower high. The S&P made a higher high this week. Equal weight is not making a higher high. Now, again, the equal weight, all things being equal on the S&P 500. Things aren't all equal on the S&P. You've got, 7 or 8 stocks or so controlling the S&P 500, and a lot of it tech related. But if you look at everything equally, well, this week we're making a lower high, at least so far. You're taking out the 10-period moving average on the equal weight S&P 500. Daily chart here has diverged, resting right on the 10-period moving average, doing the same thing the NASDAQ is doing. So pay attention. You have these recent divergences between the equal weight and the S&P and the NASDAQ, the divergence with junk bonds and the S&P 500. We've got S&P growth diverging with the S&P. S&P made a new high. Growth has not, at least so far. It's diverging. It turned up, but so far it's diverging with the S&P 500. This is what we had right before the February sell-off. We had this divergence, and the S&P 500 ended up tanking by 21%, something worth paying attention to. These divergences, like here with growth or with junk bond or with the equal weight, they're warning signs. My crash signal is diverging with the S&P 500 right now. It's no longer making new highs with the S&P 500. That's a huge red flag. You have the AD line diverging with the S&P 500. The S&P has made new highs. The AD line made a lower high last week. S&P's moving to new highs this week. They're diverging from one another. This is a huge warning sign. Oh no, this time's different. Market has gone sideways over the summer, gradually moving higher, and then we get a big September rally to new highs all over the internet. Again, we don't have sell-offs anymore. Herd is as complacent as they were at the February high. They're as complacent as they were just before the bursting of the tech bubble and just before the peak and the sell-off in the financial crisis. Look, maybe we sell off and we still go make new highs. I told you I thought that would likely be the case. I could be wrong about that. It's possible we have a top here. As I've talked about, the Elliott wave count could possibly be done. You've got Bitcoin, NASDAQ, S&P all slamming into major resistance. It's possible we get an October top. Don't want to rule it out. I'm not saying that we're going to do that. I'm saying I don't want to rule it out. Are some warning signs. We've had a massive run in the market. It's possible the blow-off top is done. I don't know that. I'm telling you it could be. We're looking for clues with the sell-off. But don't ignore this. You've got the AD line forming a divergence with the S&P 500. You're likely going to get a bigger sell-off than what we've seen so far, or at risk of getting a complete reversal and topping. Those are the risks. The bullish percentage index diverging with the S&P 500. S&P going higher. The bullish percentage index peaked back in July, and it's diverging with the S&P. This is exactly what we had before the February sell-off. You had this massive divergence. Now, again, you pull back and then still try to go higher. But the risk is that this parabolic rise, and it's now done, and we're now topping out. That's the risk. It's just things to pay attention to. Now, this could just give us a pullback. It could give us a complete reversal. Back over here, we got a reversal back in February, and we dropped 21%. We dropped more than 20%. That was the bear market. This is the new bull market. These people that say this kind of stuff, we're still in the bull market from 2009. That's delusional. 20% does not define a bear market. That's just some analyst's definition of it that's wrong. We dropped 35% during the pandemic. Was that in 3.5 weeks? Was that the shortest bear market in history? No, it was a crash in the larger bull market. We've had several declines of 20% or more through this bull market. A 20% decline is not a bear market. Markets, when you take out the 200-week moving average and stay below it, when you take out the 50-month moving average and stay below it, that's a bear market. That's the correct definition of a bear market, not some percentage drop. Wouldn't ignore this. Maybe we just pull back if this is not done yet and it gets better defined and we get one more push in the fourth quarter. Possible. We've got earnings season here about to kick off here and watching to see what happens. But there are some huge red flags that are forming. Stocks above their 200-day moving average on the S&P. We're getting a divergence right here, right now. Stocks above their 200 period making a lower high. S&P has made a new high this week. Again, this is exactly what we had before the February sell-off. This is exactly what we had just before the 2022 sell-off. You had a divergence going on, a massive divergence here, very similar to what we had back at the 2022 peak. I wouldn't ignore it. Telling us either we're going to peak right here and right now or in the not too distant future in the coming months ahead. It's the message of the dollar that you're either peaking right now or in a few more months you're going to see a peak based on the dollar bottoming out. But a divergence right here, a divergence previously with the February peak. Stocks above their 50-day moving average on the S&P 500 down here. Again, diverging with the S&P. These divergences that we've seen have only given us pullbacks. Okay, given us smaller pullbacks through the run-up. The larger divergence will probably give us something bigger or a complete reversal. But it's something worth paying attention to. Again, you had this large divergence going on here at the February peak. I talked about the extremes down at the back at the bottom in April. This is why I told you we were bottoming out when everybody said we were going to crash up here. Now everybody's saying we're not going to crash. We don't have crashes anymore. We're just going to keep going. Bird gets super bullish at tops, super bearish at bottoms. That's why they're going to be shocked when it happens. And if we are topping, you're going to see a crash back down to the April low. I don't know that that's happening, but it could. NASDAQ could be forming a massive broadening formation. S&P could be forming a massive head and shoulders pattern if we get it right here and now. I don't know, and I'm not saying, listen to me carefully, I'm not saying we've topped, but we could have, and I'm open-minded to that. Got Bitcoin, the stock market, and the S&P all at major resistance. Poppycock, what are you talking about? A top or possible big pullback for S&P 500? That's a bunch of nonsense. We're not even at greed or extreme greed. What are you talking about? What are you smoking? Not even at 50 with the fear greed index. We're not. That's not where tops happen. Well, the reason why we're not above 50 right now on the fear greed index because it's doing exactly what it did back at the February top. The fear greed index is in blue. It's making a lower high while the S&P makes a higher high, and they're diverging. Do you see this? I talked about this before. We've had multiple point divergences, but they've only given us smaller pullbacks. This is a massive divergence, just like we formed back between December and February. It was multiple months back in February, but again, you've got the same type of divergence. Oh, gee whiz. Right before the February drop of 21% on the S&P and 26% on the NASDAQ, the fear greed index wasn't above 50 either. How about that? Those people run around telling us, "Oh, we're not see a sell-off. We're not at greed or extreme greed because we're diverging, just like on other indicators that I'm showing you." I wouldn't ignore this. S&P in red, fear greed index in blue. The S&P completed a 9-count reversal signal today. Why is this important? Because last week we completed a 9-count in the weekly time frame. Now you've got a 9-count in the daily, you've got a 9-count in the weekly. Now the other 9 counts, they've only given us pullbacks. This one, very well, at major resistance, could give us a bigger pullback or possibly a reversal. And again, I'm not ruling that out. We've had a powerful move up that could have completed the blow-off top. Well, in the weekly time frame, last week we completed a 9-count. Possible 13 here. You got a 9-count here. You got a trend extension. Now you have a 9-9. That is a reversal pattern. It's a 9-count that marked the bottom. Bar 8 was the low of the count. This is a reversal pattern. And we're either going to get a bigger correction in all likelihood or a possible reversal. The NASDAQ got the 9-count this week, went a little bit higher. Sometimes that happens. Other times you turn immediately with the bar. Here we turned immediately with the 9-count. The 8 bar was the low of the count. It marked the bottom. Here we've gone a little higher. Here we got a 13. We went a little bit higher in February, and then we got the sell-off. Here we got a 9 count, no pullback, no reversal. You got an immediate trend extension, and now you have a 9-9 pattern, which is a reversal pattern. S&P has the same 9-9 pattern, also a reversal pattern. NASDAQ weekly chart right here, forming a massive broadening formation as I've talked about. NASDAQ daily chart, we're getting a 9 count completing with the S&P 500, a candle of indecision. The NASDAQ getting a 9-9 signal from the September run-up into our October high this week. Perfected signal. You've got a 9 count in the daily time frame. You've got a 9 count in the weekly time frame. You're likely going to pull back, take out the 50-period moving average and move towards the 200, or you're going to get a complete reversal and top out one or the other. We've had a spectacular rally that may have completed the blow off top. You may get one more pullback and one final run up, but there's risk right here that this is it, that we've topped. Dollar bottoming and having a bullish divergence. I'm watching the 10-year yield to see if it's bottomed out. It's trying to break out. It's been trying to clear the downward trend line of the bullish falling wedge here. Watching to see if it gets a legitimate breakout here and gets back above the 50-period moving average. I'm watching the dollar and the 10-year yield very closely surrounding the government shutdown. The 10-year yield and dollar rise, we could see volatility in the stock market. They often have a negative correlation. That's why I'm warning you, again, with the dollar bottoming, it could be bad for Bitcoin, it could be bad for gold, it could be bad for the stock market. I'm watching the dollar carefully, I'm watching the 10-year yield carefully. We got another gap and trap with the S&P. We keep going up and slamming into major resistance. The S&P had a gap and trap over here 3 days ago. Then we gapped higher. We had a gap and go intraday, and then we gapped higher. And we talked about how we came back up here to test the highs in yesterday's video. We gapped higher. We got another black candlestick, or I should say a black candlestick. Gapped higher and turned in the other direction. Here we gapped higher, we turned in the other direction, did the exact same thing. Always watch a gap. Is it a gap and go? Is it a gap and fill? Or is it a gap and trap? This was a intraday gap and trap. It might be a top. It might give us a short-term top, pullback, or be a major top. It is very possible that here on October 9th that the stock market has topped if some of these signals I'm showing you begin to play out. The risk is rather than a pullback that we've topped. Do not rule that out. I'm not saying we have. I'm not sure. I'm just telling you it's something I'm paying very close attention to. Bitcoin has this 4-year cycle, and when it ended the last time around, Bitcoin peaked and the NASDAQ peaked together. The S&P could be doing that with them. It's now a mini tech stock itself with the heavy tech influence on the S&P 500. 200 period, we dropped below it. 50 got below it. We've come back up. We closed just above that level. I'll be watching this peak as we go forward, but you've got another gap and trap here. I posted this chart. If you follow me on X, formerly Twitter, at Charting Prodigy, I posted this chart and a few others today. You got this divergence going on here in the 50-minute time frame. Again, talked about this. We popped up a little higher and then turned. You get this larger divergence going back here from early October. We take out the 200. We're bouncing off it right now. You take out the 200 here on the 50-minute time frame. You get rejection at the cloud, rejection at the 50. You take out the 200. You're going to go lower and take out this low. That would be bearish. You get above the 50, you get above the cloud, you got this resistance directly overhead. There's major resistance, though, as we're turning here. 60-minute chart, we're turning off of this trend line right here, and we still may reach this one if we try to go higher. Going back over here into mid-September, we have, again, this larger rising wedge from the September low. You've got this potential rising wedge. Maybe it's done, maybe it's not. We're bouncing out the 50 right here, bouncing out the 200 on the 15-minute chart. If you come back and you take out this trend line, take out the cloud, be headed towards the 200 period. Again, you've got the possibility of a smaller head and shoulders here. You've got the possibility of a massive one if we end up topping, but you've got the possibility of a smaller one developing here, or if we go up and hit this trend line one more time and coming down like that. Something worth paying attention to here. No guarantee a head and shoulder sets up. It's just a possibility. And you got this massive divergence developing. Nasdaq had turned back up. We popped a little bit higher this week, and now it's rolling over. You've got this massive divergence. You've got a divergence in the most recent price action. And again, we're holding above the 10. You lose the 10, the red line there. You lose the 20-period moving average here in the daily time frame for the S&P. You lose the momentum cloud. Then you're going to get a bigger sell-off. We have the same divergence going on here in the on the MACD here in the daily time frame. The same divergence with the peak over here. From September. You've got this divergence going on right here, and you've got this larger divergence going on. This is the divergence gave us some of the volatility in the run-up over here and over here during the summer. That has formed a massive divergence with the S&P 500 that's either going to give us a sell-off likely towards beyond the 50 period here, likely towards the 100 or 200 period moving average. Risk is that you have a major top right now and you're getting a reversal. And again, don't rule that out. CD rollover today. Again, does the market sell off ahead of earnings with this government shutdown, or maybe Trump rattles the markets if he starts doing permanent layoffs? There's some other catalyst. Market starts selling off if we start seeing the dollar and the yield, the 10-year yield begin to surge. Whatever the case may be, whatever the catalyst is, a lot of divergences, a lot of indicators warning something's getting ready to happen. Zoom out here, you can see the massive divergence between the MACD and the S&P 500. And again, it goes back further, as I've said, given us some of these sideways moves or pullbacks. You have a massive divergence that has formed. And here's the divergence in the more recent price action on the RSI. Again, very well could be coming to a conclusion at this trend line right here. If we begin to see these signals play out, again, the signals are still bullish. If we start taking out the 10 and 20 period moving average, we start breaking down from this larger rising wedge or breaking the support levels I've talked about. Again, a 10% move would take us down towards the 200 period moving average. If we get something very similar to what happened in July of 2024, the risk is that you come all the way back down and you end up getting a massive head and shoulders. I have the wave 4 marked here and a 5 for one final push higher into the fourth quarter. That's possible, but it's also just as possible. My alternative count, you can see here that I've marked this as a wave, primary wave 3, primary wave 4, and primary wave 5, and it's over now. That's the alternative count. So again, I'll be watching to see which one of these counts plays out. I think one of these two possibilities are likely going to be the case. If we start selling off, it's probably going to be pretty dramatic. There's so much complacency and nobody thinks it's possible. You know, NVIDIA gapped higher today, but it got a topping tail and a possible reversal doji or spinning top looking candlestick here, slamming into major resistance in the weekly time frame that I've talked about. I've talked about the trend line from the 2018 high right here, this blue trend line right here. We've overthrown it. We moved towards the red trend line here. And we're just slightly under that, but again, slamming into this trend line. This is a trend line from the 2023 low. I've talked about it in every single video. I'm not going to scroll out and show you, but just want to show you right here. Again, we're slamming up into it. We keep slamming up into it, and you're forming divergences here as you slam up into that upper boundary, and it's forming a larger rising wedge from the May low right here. This trend line has acted as support. We've tagged it 6 times, and bounced off of it each time. The last time right here before the September run-up. If you come down and you break this trend line, reversing off of these other trend lines, this 2023 trend line from the 2023 low, then again, you're going to get a bigger sell-off or you're going to get a reversal. People make the mistake and they go, oh, well, it hasn't happened yet, so it's not going to happen. The stock market is doing exactly what it normally does with a blow-off top, remaining elevated for an extended period of time. The risk is we are topping right here, right now in October, completing the bull market. The other possibility is that we sell off and we rally into the fourth quarter, maybe the first part, maybe to January, into the first quarter of 2026. The risk is you're going to get a top right here, right now. Again, I'm not saying we are getting a top. I'm saying I sure don't want to rule it out. NASDAQ 100 was down 0.15%, down 38 points today. Again, 15-minute chart. You've got this rising wedge going on. We turned off of this level here, this trend line. You've got this divergence, and we turned down. Got to take out the cloud. You got to take out the 50 period. We bounced near the trend line there. You got to take out the 50 period, the cloud, and the trend line, and the 200 to get a sell-off here on the NASDAQ. The same divergences going on here as you do with the S&P. Again, go up and hit that upper boundary of the rising wedge one more time, as I showed you on the 15-minute chart. Bouncing off of the trend line right here, just moving towards the 50 but not quite reaching it. Do we go up and slam up into this area one more time, or do we start breaking down immediately? Again, it is going to be mass layoffs that end up rattling the stock market. Does the Trump administration wait until after the stock market closes on Friday to do it? I don't know. And again, we don't know if it's going to impact, how is the market going to respond to that? Or will there be another catalyst, or earnings season, or something else, or just the government shutdown in and of itself? Concerns about the economy going forward, if it starts dragging out, things to be paying attention to. Estimate share to the S&P or NASDAQ. Here you can see the divergence on the RSI. Again, this rising wedge looking pattern here. We're forming that going into the broadening formation with the bigger picture. And again, you got this massive divergence on the MACD. The MACD is rolling back over. I believe on the S&P 500, we'll likely see that happen here. You've got a divergence in the most recent price action right here on the MACD and on the histogram here, which is the difference between the MACD line and the signal line. Yes, that MACD is rolling over today on the S&P 500. Possible little hanging man here on NASDAQ today. And again, no rollover yet on the MACD close up here. You can see it. But as we're slamming up into this level here on the intraday charts, we're getting this divergence going on here in the daily time frame. And right here below our lower Bollinger Band, you're slamming into the trend line from July of 2024, the upper boundary of the broadening formation. And here, if we zoom out, we can see it going all the way back into July 2024. Every time you hit this trend line, you get a major sell-off, as I've said. Again, 16%, 26% with the February sell-off from the February high. Here, if we go down 16%, you're going to take out the 200-period moving average. If you get something bigger, I've got either top here or question mark top here. Do we sell off and then go back and push up one more time? Or is this it? Is this now a 5-leg push higher? Is this now a 5-leg push higher that's now done? And it very well could be done. If we don't top here, we're going to sell off, rebound back up, and get one more push higher on into the fourth quarter or early on into the quarter one of 2026. But you're likely going to either top here or top in a couple of months, one or the other. NASDAQ daily chart, our broadening formation here.